I always love to talk about what stocks I'm buying, the type of companies that I'm looking for, but it's very vague sometimes unless you watch my channel on a frequent day-to-day basis to know what stocks I'm actually looking for. So in this video, we're going to go over the 3 top stocks that I'm either buying or planning to buy in the month of December, and honestly, these are long-term holds for most of these cases. One of these stocks I already own, which you're going to see, I'm going to show you just right now. As you look at my holdings portfolio tab, you can see that we have one of my holdings listed in this video, which is CRM, but this video is not just full of companies that I own. Well, the 3 listed here, only one of them I actually currently hold in my portfolio, and the other 2 are new potential adds. And if you want to see the 3 companies in order, what we're going to go through, we're going to start with Activision Blizzard, which we're going to talk about the potential arbitrage bet you can play, as this is potentially being bought out for $68.7 billion, or $95 a share, by Microsoft, how this will be affected in terms of their backlog of video games, and how their Xbox Game Pass could reflect this massive change if they were to buy out Activision Blizzard. We're going to talk about CRM. This is the company that I own, which is Salesforce, how they just raised their profitability guidance from a previous 20.4 up to a 20.7% non-GAAP operating margin, how they're facing major headwinds from FX or foreign exchange headwinds, and you can see this on both a segmented and geographical basis how bad they're facing this, but this is still a wonderful company at what I consider to be a pretty good valuation. And then we're also lastly going to talk about Crowdstrike, which is a very fast-growing, very rapid expanding, high valuation company that I find very interesting in the world of cybersecurity. Not only are they growing very fast, but they have some of the best metrics in terms of profitability, in terms of net retention rates, and just overall business fundamentals. So it's going to be a fun one. We can go ahead and get started. And without further ado, let's go ahead and start with the number 1 on the list, in no particular order, Activision Blizzard. But before we get into all that, we have to talk about today's sponsor, MooMoo. MooMoo is a new up-and-coming brokerage that is taking the world by storm. Commission-free trading, level 2 data, advanced technical indicators, earnings calendars to see the date of financial statement releases, and institutional tracking to follow Warren Buffett's portfolio are just a few examples of what MooMoo has to offer. With this being my first sponsor in the channel, I have fully vetted their company and stand behind their vision. MooMoo currently trades on the NASDAQ under ticker symbol FUTU for FUTU and is SIPC insured. If you sign up below using my special referral link, you can get anywhere from 1, 10, or even as high as 20 stocks for signing up when you use my special referral link down below in the description or in the pinned comment down below. Free stock amounts can be as high as $1,000, so sign up now using the link in the description or pinned comment down below. You would help support me and my channel by doing so and give yourself an edge in the world of investing. Thank you so much, MooMoo, for sponsoring this video. Now back to the content. Okay, welcome back, and let's go ahead and start by taking a look at Activision Blizzard's growth. Over the last 10 years, they've grown at a compounded rate at 6.35%, not bad, and last year they put up pretty stellar growth of 8.87, which is not bad whatsoever for a company this size. 8.8 billion last year in the most recent quarter. However, I do need to mention that they did shrink revenues, down 13.91%, but the real play here is not so much the fundamentals of the business, it's a potential for an arbitrage play. Now, what does that mean? That means that Activision Blizzard currently has a deal open from Microsoft to buy them for $68.7 billion, which is $95. Now, what does the price trade at today? Well, if you see right here, today it trades at 76. So if you were to buy Activision Blizzard stock and the deal actually goes through, if the government does not stop this deal, based on where we're at today, that's about a 25% uproar just from this deal closing. Now, if it doesn't go through, we could very well see this stock drop. In fact, it likely would drop. Something I want to mention is that right here, back in January when this deal was announced, let's zoom in here. Right when this was announced, the stock was about $65 a share. So using some common logic here, if you just look at where the share price was before the deal was announced, if this deal was to not go through, it's very likely that this stock would likely drop somewhere around to the $50 or $60 range. Now, that's not very far considering right now the share price is in the mid-70s. However, you could get bought out at $95 a share and get an easy uproar. And Microsoft really wants this for their Xbox Game Pass. This is an example of their ultimate PC and console subscription for their new Xbox Game Pass, which is likely going to make Microsoft a a whole lot of money. And the reason why this is so cool is because their barrage of games, their library, their backlog of video games that have already been made over the last few decades can now expand into an even vast, more broad category. You see all these names down below with Xbox, like Forza and Fallout and Halo and Starfield and many others, but they would be acquiring all these other big name brands like Diablo and Overwatch, Call of Duty, Tony Hawk's Skater, Candy Crush, and many others that are not included on this list as well. And so this would give Microsoft a leg up, and then of course would give Activision Blizzard shareholders a lot of cash if this deal were to go through. So that's one that I could be buying here in December of 2022 going into January. Now next we go into my largest position. Now if you look right here in my holdings tab, as of the most recent time I've updated this, which is around a week or two ago, 32.5% of my invested capital, or about $28,000, was invested inside of CRM, which is Salesforce. Now, if you look at this, you see the fiscal year 2023 quarter 4 guidance is slowing down growth in a big way, only representing 8 to 10% growth, and they've had a huge headwind this year of FX, which is foreign exchange, which basically means as the dollar goes up, foreign revenues become less valuable. You see that they faced almost $1 billion headwind, and growth would have been significantly better if they didn't have this $1 billion headwind of foreign exchange headwinds. Now, something I want to mention is that growth, if you didn't have this headwind, would have been closer to a 20% growth rate in the fiscal year rather than 17. Now, 17 is decent, and this company is still doing very well, and this is one of the major reasons why I like this company. Now, even despite these currency headwinds, the company is still growing pretty incredibly. More importantly, the profitability has been going in the right direction over the last several years, and they just raised their guidance in terms of their profitability. The company was previously projecting 20.4% on a non-GAAP operating margin. They have now raised that 30 basis points up to 20.7, which means now, even though the company is not growing quite as fast as we were hoping for, the profitability is improving in a big way. So the funny thing is that this company reports profitability in kind of a weird way, only 2 of the 4 quarters of the year, as you can see right here. But if you take into account the fact that margin is projected to be higher, I think these next 2 quarters that are going to be reported over the next 5 or 6 months are going to be record levels. If we hop over into the annual side here, you can see that last year they produced $5.28 billion in free cash flow, and it's very likely that I think this company's free cash flow for this reported year is going to come in somewhere around 6.4 to 6.5 billion dollars, which is a big improvement from last year, which represents about a 20-ish% growth rate, which is absolutely incredible. And you can see how the currency headwinds have been faced not only in each segment. You can see 12 versus 17, 12 versus 16, 18, 22, 12, 18, 13, 16, but also on a geographical basis. This definitely becomes apparent in the EMEA and the APAC section all over Europe and Russia and Australia and New Zealand and India and all these different countries that are having foreign currency headwinds, and you can see how the growth would be doubled in both of these segments if you didn't have constant currency issues. So that's something to factor in for CRM. They currently trade at about a 25 price to forward free cash flow, and it's one that I think deserves to be trading at a valuation considering how recurring and how consistent their revenue is, not only on an annual basis looking at this chart right here, but even on a quarterly subscription model that seems to break records literally every single quarter in the company's history. So stay tuned. The company's projected to hit a new record next quarter, but in the meantime, you can be looking at buying the stock, which is currently down year to date 50%. Pretty incredible, right? Lastly, we go to Crowdstrike. And speaking of companies that have been down a lot this year, like all these companies, it seems like pretty much every stock we talk about in 2022 is down a lot. Year to date, this company's down similar to Salesforce. It's down 44%, and it's finally had a big downturn. If we pull up the last couple of years, you can see that it's started to go on a big downslope on the last back half of 2022, especially in the fourth quarter. Just 3 months ago, the stock was around $200 a share. Today, it trades at a lot lower price of $111, which is a big difference. That's a huge downturn. You can see over the last 2 years, this company's down a pretty much similar amount, and on a 5-year basis, it is still up a lot, but you can see ever since the peak at around 2020, right after the pandemic happened, this company's either been flat or even in a downtrend ever since. However, similar to Salesforce, the revenue has been going higher and higher and higher every single quarter because this is also a subscription revenue business. Now, they sell cybersecurity products, but they are expanding their TAM, or total addressable market, by expanding into new categories, which you can see is displayed on this slide right here. They're adding new products, including things like identity protection, data protection, log management, and many others, so they can constantly be selling and cross-selling their older products. Similar to what Salesforce does, they have about 7 different clouds. This business is very similar. They want to get your foot in the door with 1 or 2 products and then cross-sell you over time as you trust and love their business. One thing I love to mention about Crowdstrike all the time is their net retention rates. Right now, as of the most recent quarter that they've reported, it had 123.9% net retention rates, which means not only are they not losing customers very fast, but those that stay typically spend 23.9% more than they did the year before. Another thing I might mention is that not only are they adding on new customers and growing quite nice, but the profitability is coming in a big way. You can compare the first 9 months of fiscal year 2022 versus the first 9 months of fiscal year 2023, and it has already grown a ridiculous 49% year over year, and this quarter right now is going to project it to be at a much higher rate than where we were last year. So Crowdstrike, similar to the others, is down a lot. The profitability is up, the revenue is up, all at record levels. In the most recent quarter, the profitability grew 41%, the revenue grew a top high level of 52.8%, which is just insane. And so these are all 3 companies I'm going to be watching out for in 2022. So thank you guys so much for watching. Check out all the stuff down below in the description if you haven't already. Please check out MooMoo. Thank you guys so much for watching this video and sponsoring my channel. But other than that, guys, I'll catch you all next time.